Good afternoon and welcome to Onboarding New Directors. During this webinar, we will review a checklist of activities and recommendations and best practices for you and your board to consider for making an easy transition and immediate engagement of your newest member. I'm Jack Milligan, Editor-at-Large at Bank Director, and we thank you for joining us. It's great to have you here, and for the next 30 to 40 minutes, I'd like to offer some advice and perspective on how to merge new directors into the fast lane of banking and corporate governance. This webinar is brought to you by Bank Director. It is available only to Bank Director's Bank Services members, and we offer it as one of many benefits that come with membership. Bank Director reaches the leaders of the institutions that comprise America's banking industry. Since 1991, Bank Director has provided board-level research, peer insights, and in-depth executive and board services. Built for banks, Bank Director extends into and beyond the boardroom by providing timely and relevant information through Bank Director Magazine, board training services, and the industry's premier event, Acquire or Be Acquired. For more information, please visit bankdirector.com. Before we get started, let me share just a few things to keep in mind. First off, don't worry, we can't hear you. You have joined this webinar in listen-only mode. We recommend that you click on the sidebar at the bottom of the screen to put the presentation into full screen mode. If you have any questions, please note them by clicking the Q&A button found on the right side of your screen. You can do this at any time during the presentation. There is no need to take detailed notes, as the presentation will be shared with all attendees within 24 hours via email. It will also be available on bankdirector.com exclusively for our bank services members. If you have any technical issues, you may also note those using the moderator chat feature on the right-hand side of your screen, and we'll do our best to take care of it. So let's get started. I was talking earlier this year with Dave Porteous, the lead director at Huntington Bankshares, which is a very large regional bank in Columbus, Ohio, about its onboarding process. Huntington has brought on several new directors in recent years, and Porteous commented that the onboarding process really starts with the first conversation you have with a potential new director during the recruitment stage. And in that conversation, how do you describe the bank's strategies and operations? How much detail do you give them? Is the board focused solely on organic growth, or does its strategic plan also contemplate an acquisition strategy? How do you explain the board's culture so they have a sense of what its values are and what would be expected of them? If you expect that all directors take part in board discussions and come to meetings having read all the materials, you should make that clear at the outset. It will probably take a new director some time to fully engage in the process, but they should know what the board's ultimate goal is for their participation. Are directors expected to help bring business to the bank, or is their role focused solely on corporate governance? And how candid are you about the challenges that the bank faces, which they will have to wrestle with along with everybody else on the board if they decide to join? That initial conversation with a prospective director is a little bit like a first date, where you wouldn't typically mention all of your bad habits, but you certainly would want to be honest about any serious problems. Let's say, for example, the bank is operating under a memorandum of understanding with its federal regulator to strengthen its anti-money laundering compliance. That's certainly an issue that has tripped up a number of banks in recent years, and you would certainly want to disclose that and discuss its implications. And wouldn't it be helpful if the board had already developed an onboarding process for new directors that you could share with them so they would understand how they would be integrated into the life and affairs of the board? It probably takes at least a year for a new director to feel comfortable serving on a board, especially if board service is new to them or they are new to banking. Banking is a complex industry with its own language, its own way of measuring performance, and its own regulatory system. There is also a kind of circadian rhythm that occurs on every bank board, things like the strategic planning retreat, the external audit, regulatory exams, the annual meeting, and a full slate of board and committee meetings. It's like any other new job, really, where it can take a year or more before you really have your arms around it and it no longer feels new. However, there are things you can do to accelerate the new director's learning curve. And over the next few minutes, I will offer the broad outline of an onboarding program that introduces the new director to your bank, to the banking industry, and to the governance process. These suggestions are geared to someone who is new to banking and also new to service on a corporate board. If you recruit someone with a banking background or someone with prior experience on a corporate board, their learning curve will probably be a little shorter. I think one of the most helpful experiences for a new director is the opportunity to spend time one-on-one with members of the senior management team. In strong board cultures, the different roles of management and the board are well defined, and there is a level of mutual respect between these two groups. Not only do these discussions help them learn about the bank and its various businesses, but they start to develop relationships that will help them later as a director. And individuals that I think the new director should visit with certainly is the CEO, the chief financial officer, major business line leaders, the senior HR executive, the senior technology executive, and the senior risk and or credit leaders. I think a new director would also benefit from visits to several of the bank's branches and its data processing center, other important facilities that it might have, just as an opportunity to meet frontline employees. This orientation process could take several months to accomplish, given the realities of people's busy schedules, but I think it's an invaluable element of an effective onboarding process, and it may, in fact, be the single most important takeaway from this discussion today. As I mentioned earlier, banking has its own way of measuring performance that doesn't have many parallels in other industries. Key ratios like return on assets, return on equity, the efficiency ratio, regulatory capital requirements, and a variety of credit metrics are really how management and the board tend to measure and manage the performance of the bank. These are not difficult concepts to grasp, and the bank's CEO or CFO should be able to walk the new director through them without a whole lot of difficulty. Other important documents the new director would benefit from familiarizing themselves with include the bank's most recent income statement and current balance sheet, recent call reports, and SEC filings like the bank's 10K, 10Qs, and proxy statement, if it is publicly held. And for public banks that have a large enough market cap that they are covered by research firms, I would suggest they read some analyst reports to gain a perspective of how the investment community views the bank. As we all know, banking is a very complex industry, and learning enough to be an effective director may be the biggest challenge facing most new board members, obviously, if they don't come from within the industry. I don't think the directors need to know as much about banking as the management team. That's not really why they're there. But they do need to know enough to ask good questions and to offer a credible challenge, which is the core responsibility of every board. Not knowing what you don't know is never a comfortable position for a director to be in. Regulation, consolidation, merger and acquisition trends, digital transformation, cybersecurity. These are just some of the critical issues that are impacting the banking industry today. Regulatory priorities may change under the Biden administration, and management and the board will both need to understand these as they occur, if they occur, and then adapt. The Office of the Controller of the Currency is being run by an acting controller, and a new permanent controller may have a different agenda for national banks than the previous controller, Joseph Otting, who was a former banker appointed by Donald Trump. Federal Reserve Chair Jay Powell's term ends in February of 2022, and FDIC Chair Jelena McWilliams' term expires as chair in 2023, and new leaders at the top of both agencies could also usher in new regulatory priorities for the banks under their supervision. Consolidation and M&A trends are really just two sides of the same coin. We've dropped below 5,000 banks and thrifts from around 14,000, probably about 2 decades ago. And even community banks today are focusing more on scale to help facilitate their own digital transformation. It's no secret that the COVID-19 pandemic accelerated a shift towards digital distribution on the retail side. I think you've all probably experienced that directly. And I think the impact of this transformation will be permanent going forward because of shifting consumer preferences. But of course, the deeper we go into this digital transformation, the greater our cybersecurity risk becomes. This is a hugely critical issue that the entire board needs to focus on, and the new director will have to go to school on it. These are only a few of the big issues that are impacting banking, and I don't want to turn this into an industry overview session, but how does the new director learn all of this new and very important stuff? So here are a couple suggestions. The recommended one-on-one meetings with members of the senior management team can start filling in some of the blanks on these and other issues. Many bank boards have a practice of bringing in experts to brief them on issues like cybersecurity and M&A trends, and these can be helpful to the new director as well as more experienced ones. Bank director can also be very helpful here. We host several annual conferences that can help speed the new director up the learning curve, and I'll talk about those a little bit later. We publish Bank Director Magazine, which is full of useful information. We have hundreds of articles on our bankdirector.com website with new content added daily. Bank Services members have access to an extensive library of over 50 videos in our online training series, and I recommend that new directors go through the entire library. And we hold quarterly online peer exchanges for Bank Services members that typically touch on a variety of topics. I think it's important to emphasize when we're talking about, learning about the industry and that educational process, that every director bears some responsibility for their own professional education through outside reading. They can't rely solely on the bank to prep them, but although certainly the bank can point them, and organizations like Bank Director can point them to useful and helpful resources. Professional education is an imperative that never really ends because the industry continues to evolve, and every director needs to stay on top of new issues and trends. The new director will also have to be integrated into the ongoing operations of the board. When we were talking about how Huntington onboards new directors, Dave Porteous told me that when he was invited to join the board of a community bank in his home state of Michigan 30 years ago, there was no orientation process. He went to his first meeting, he sat, he listened, and that was it. And I bet that's still the case with many bank boards today. New directors need to understand the fiduciary requirements of board service, including the duty of loyalty and duty of care. These are not difficult concepts to explain or understand, but they are important. For some interim period, you might consider asking the new director to attend other committee meetings in addition to their own assignments to get a full sense of what the other committees focus on. It will give them a fuller view of everything that the board deals with. I think most boards value having a collegial environment, so opportunities for new directors to get to know the other board members can facilitate their integration into the operations of the board. Some boards have a dinner the evening before their regular board meetings, and these can be very helpful. It could also be helpful to assign an experienced director to mentor a new director as a sort of board buddy. This could be the independent chair or lead director, or it could just be a veteran board member who has time to make themselves available to answer any questions they might have. At this point, I'd like to go through a checklist of reading materials and activities that could be helpful to the new director. You can find this checklist on our bankdirector.com website. Click on the membership drop-down tab at the top of the homepage, and then click on governance resources. That will take you to a new director onboarding and training page where you can download the PDF of our onboarding resource guide. I prepared this guide a few months ago, and this presentation is largely based on that information. And at the back of the guide is this checklist of material and activities. So let's start with materials. Biographical information for board members with contact information. This isn't a substitute for social occasions that allow the new director to get to know the other board members, but it provides important background on the people they will be serving with. Calendars for full board and standing committees. This is something that whoever does the director recruiting for the board might consider sharing early on so the candidate has a sense of the time commitment board service entails. Add in prep time prior to every meeting, and board service can be a tremendous time commitment. And I'm sure I'm preaching to the choir here because you all understand that fully well. Calendars for the full board and standing committees, standing committees, assignments, and charters. This will give them a good view of how the board has organized itself and what the scope of each committee is. Code of conduct for the bank. It goes without saying that you only want people of the highest moral and ethical caliber on your board, but new directors still need to understand how that is defined within the context of personal behavior on your board. Directors and officers liability insurance policy. Unfortunately, board service also comes with certain legal liabilities, and new directors should understand how they are protected under the bank's D&O coverage. Current strategic plan. Some of this information may have been discussed during the recruitment phase, but new directors will benefit from being able to read the full plan, especially if the board has a practice of periodically reviewing management's performance against the plan's objectives. And the most recent annual report, this is actually an error. Instead of the most recent report, I would consider giving them the 3 most recent reports so they have a broader historical perspective on the bank's financial performance. Current annual budget and profitability projections. The board is responsible for overseeing the financial performance of the bank, and this will bring the new director up to speed in terms of the bank's current level of profitability and whether management is ahead, behind, or on track with the plan. The last 4 earning releases, again, this is important background information that the new director needs, like the annual reports and the strategic plan. If the company is publicly held, it will also familiarize new directors with how the bank reports its earnings to the public. Most recent investor presentations, if the bank is publicly held. Here, I think it would be useful for a new director to understand how the management team, whether it's the CEO or CFO, describes the company to investors. Most recent analyst reports if the bank has research coverage. In the same vein, I think it's helpful to know how the investment community views the bank. How do their perceptions square with how management describes the bank to investors? Board materials and minutes of the previous year. I think this is particularly important because it will give the new director a comprehensive overview of all that has been discussed by the board. And of the two, I think minutes are particularly important, especially if they provide a thorough summary of what was discussed and decided. I would also share with them the minutes of whatever committee they will be assigned to, so they have a sense of what the committee has been working on. Board books, as you know, can run to hundreds of pages in length, and it would be a lot to digest. So perhaps this material could be shared more selectively, not to withhold information, but to focus on what's most important for an incoming director to know. I know of some banks, Huntington is one of them, that actually provides an executive summary for all of the major reports in the board book. And if your bank happens to be one of the banks that has that practice, then distributing the executive summaries rather than the entire board book, I think would be probably the better option. Results of the bank's most recent regulatory exam. I think it would be very important to know how the bank performed on its most recent exam, especially if there were any items that were identified by the regulators for corrective action by the management team. The board is ultimately responsible for making sure these issues are corrected to the regulator's satisfaction. And explanation of the board portal for distribution of board meeting materials, if applicable. My sense is that most bank boards have moved to a digital portal for the distribution of board materials prior to a meeting, and new directors will need to understand how this process works. And regardless of how the materials are distributed, they will also need to understand what is being distributed. And here's a list of some of the orientation activities that would be helpful to the new director. We're still working off this onboarding checklist. Schedule meetings with the CEO, Chief Operating Officer, and CFO, the heads of all major business lines and the heads of all major staff functions, including human resources, technology, legal, risk, and internal audit. These meetings should include briefings on key industry trends, markets, major competitors, and any significant business challenges or opportunities, the bank's risk profile, an enterprise-wide risk management program, cybersecurity risks, important regulatory issues, results of the most recent employee survey, if there is one, and capital and funding strategies and challenges. And I think another thing to keep in mind is that these individuals are all people who are likely to appear at board meetings at one time or another. Certainly the CFO, probably heads of major business lines from time to time. probably whoever heads up cybersecurity, frequently, if not at every meeting. And this is a way for the new director to get to know these people and have some familiarity with them before they come into the boardroom to brief the full board. But also suggest that you schedule a meeting with the board chair, lead director, and/or chair of the governance nominating committee to review the most recent board evaluation, committee evaluations, and CEO evaluation. You'll see I also mentioned peer-to-peer performance evaluations, and that's also an error. I shouldn't have mentioned that. Only a small number of banks do individual assessments, and they are intended to be confidential. They should not be widely shared with other members of the board. So that is not something that you would typically show. You would not typically show a new director, I don't think, the performance evaluations of other people on the board if the board has a practice of doing those assessments. If the individual has never served on a corporate board before, I would schedule a meeting with the board chair, lead director, or chair of the governance nominating committee to review the director's roles and responsibilities. Obviously, if the new director has experience serving on other corporate boards, this is less of a concern, although if they've never served on a bank board before, it would still be helpful for them to understand what the bank's regulators expect of them. I would suggest you schedule a meeting with the chair of the compensation committee to review incentive compensation plans for the senior executive team. Anybody who serves on the compensation committee knows these incentive plans tend to be very complex, as is the methodology that goes into establishing them. So this session can be very helpful to the new director. The comp committee may do the legwork, but the full board must approve the plans. So every director needs to understand the process, even if they don't serve on the committee. Review the new director's committee assignments with the committee chairs. Here, let me refer back to my earlier comments about committee meeting minutes and committee charters, which in addition to these conversations and briefings with the committee chairs, will help prepare the new director for their committee assignments. And during the first year, I would suggest that the new director attend as many of the standing committee meetings as possible. I know this probably sounds a little excessive, especially for a director who is still working full-time and perhaps running their own business or practice, but it would give them a full view of what the committees focus on and how they work. Plan visits to select branches and the new data processing center to meet frontline key personnel. This will help broaden the new director's perspective about the bank. I don't think their perspective should be limited to just their experience in the boardroom. Sometimes the opportunity to see and touch can really broaden your perspective on certain things. Schedule an informal reception for the new director to meet the other board members. I think it's important for even experienced directors, frankly, to have opportunities to engage with their peers in less structured situations, but it's especially advantageous for someone who's joining the board. For the first year, assign an experienced board member to mentor new directors who have never served on a corporate board before. This is what I mentioned earlier. This doesn't have to be a big lift for the board buddy. It's really just a matter of being accessible when the new director has a question, especially the so-called dumb question they may be reluctant to ask in front of a large group. Bank Director offers a variety of resources that I think can be very helpful to a new director and those individuals on the board who have responsibility for onboarding. Bank Director magazine is published quarterly and includes articles on both corporate governance and banking, and I think serves an important educational function. On the bankdirector.com bankdirector.com website. We have articles on M&A, strategy, technology, risk and regulation, among others. We do 5 major research surveys a year on compensation, risk, M&A, technology, and governance best practices. Someone who was joining the board and being assigned to the compensation committee, for example, I would suggest they go into the archives of our website in the research section and read 2 or 3 of the past surveys. They're done in a very professional way. Each one's a little different. They tend to focus on a different theme or set of themes every year, and I think would be really valuable background for the new compensation committee member to have. And I would say the same thing about risk, same thing about technology, the same thing about governance and best practices. And then we do virtual peer exchanges at various times throughout the year on a Zoom platform. I always enjoy those, and then webinars like this one for bank services member banks. We also do 4 major conferences a year, beginning with our Acquire or Be Acquired event in Phoenix, Arizona, every January. In addition to M&A trends, we also focus on a broad array of strategic issues that impact bank performance. Unfortunately, and as probably many of you know, we did not hold the event in 2020 because of the pandemic, but we are on track for January 30th through February 1st in 2022. And if you come to Acquire Be Acquired next year, I'll see you there. The Bank Audit and Risk Conference is generally held in June, but this year, because of the pandemic, we moved it to October 25th through the 27th in Chicago. And I think this would be an excellent event for a new director who's been assigned to the Audit or Risk Committee. The Bank Board Training Conference is scheduled for September 13th and 14th in our hometown of Nashville. This would be a good event for someone who's been assigned to the Governance and Nominating Committee, but it also provides a good introduction to corporate governance and banking for any new director. And the Bank Talent and Compensation Conference would be an excellent choice for someone who's been assigned to the Comp Committee. We provide a lot of detailed information on our compensation plans generally, but we also discuss talent management in a broader context. That conference has been scheduled for November in Dallas. I apologize, I don't have the dates in front of me, but you can easily find those on our website. As a member of the Bank Services Membership Program, there's a lot in this program that you really should take advantage of since you're paying for it. And I think it can really be helpful, not only for the performance of the board, but especially for a new director who's coming in. It includes a subscription to Bank Director Magazine. You have exclusive access to the online training video series that I mentioned earlier. We, as Bank Services members, have access to our board and executive performance surveys. We do a number of these every year. They are both for the board and for peer-to-peer if you choose to do that. They're for separate committees. And we also have an executive version. You have exclusive access to FinTech Connect, which is a platform we created a few years ago that includes a number of different FinTech companies that have shown that they can work successfully with banks on partnership products in the FinTech and innovation space. And then there are special member rates to bank director conferences if you're a Bank Services member. You also have exclusive access to virtual peer exchanges, online access to all conference presentations and materials. We publish a monthly email newsletter called The Insider, which contains industry news and updates. You have access to exclusive online content and videos. We regularly update our board structure guidelines, which is content within the Bank Services section of our website that provides detailed information on the operation and performance of a number of different standing board committees, along with sample charters. This would be actually very good content for a new director to review, because I think it would give them not necessarily specific information on how your audit committee or your compensation committee has been structured, but it would give them a very general sense of what the industry practice is. And then there's also a bank glossary of terms, which they might also find useful. Two books I would recommend for every director to read are published by the excuse me, Office of the Comptroller of the Currency and the Federal Reserve Bank of Kansas City. They are both published in a digital format and are available as a free download from the agency's websites. The director's book includes chapters on the board's role in corporate and risk governance, including the responsibilities of the individual director, and Basics for Bank Directors covers the dual banking system, regulatory compliance, and various aspects of the safety and soundness mandate. I think these books are valuable resources regardless of whether you're a state or federally chartered bank, because they focus on really basic principles that apply broadly to all insured depository institutions. As you might expect, they take a regulatory perspective on board governance, and there are other critical issues that bank directors need to understand that the books do not cover, but it's still important to understand how your bank's regulators see the role of the board. So we've reached the Q&A section of the webinar, and if you have a question, I would encourage you to submit it. I do have one that I'd like to speak to. Of all your recommendations, what do you consider to be the most important? Yeah, there's a lot here, which I acknowledge. And I think probably the way I would approach it, if I was the person on the board responsible for shaping the onboarding experience for a new director, would be to go through and take out what seemed to make the most sense to me and what seemed to fit comfortably with my board's process and my board's culture. But a couple of things that I think are particularly important. I think the one-on-one meetings with senior management team is absolutely critical, because, as I said earlier, not only do they get a good thorough briefing from a senior executive on some critical aspect of the bank's business or the bank's performance, but they also begin to build a working relationship with that person. Because again, many times, if it's the CFO, if it's the chief technology officer, if it's the chief risk officer, these individuals will be in and out of the boardroom various times, briefing the board. And, this is a way of beginning to develop that personal relationship that I think can, grease the wheels of governance, so to speak. I think opportunities to get to know the other board members in a more relaxed setting is really important. The board is not a social organism. It's not there for recreation and entertainment, obviously. But most boards that I'm familiar with place a very, very high premium on collegiality. They want there to be a sense of mutual respect and communication between the board and the management team, and between the board members themselves. And I think, all of that can be facilitated by having a chance for people to get to know each other a little bit more on a personal level. Other things, the most recent income statement, I think is key, and the current balance sheet. It's just, they're report cards that sort of indicate, how big is the bank? How are its assets arranged, and what's its profitability? And then the board and committee meetings, committee meeting minutes, excuse me, I think are really important. They give a full, hopefully a detailed record of everything that the board has talked about and decided over the previous 12 months, which would be really important information for the new board director to have, because as you know, the new board member is merging onto a busy highway of information, and things will come up that have been discussed before. And if the board, if the new director has some sense of what those issues are about, having seen them referenced and discussed in previous minutes, it will help them understand better what's going on. Well, we don't have any other questions, so oh, actually, I'm sorry, we do have one. Let's see. I am on a couple of private company boards of directors. Can you please describe the difference you see between a bank director role and the business board of directors role? I'm not sure I fully understand the question, but I think, excuse me, I'm not sure I fully understand the question, but I think probably if I'm interpreting this correctly, I think one of the biggest differences between a bank board and the board of director of any other kind of company, with the possible exception of maybe in the healthcare industry, is the regulatory expectations for the performance of the bank from a safety and soundness perspective, and also the performance of the directors in terms of what their duties and obligations are. One of the reasons why I suggested the two books, the one from the OCC and the one from the Kansas City Fed, was that I think they really give you a sense of what the regulators are expecting in terms of the performance of the board and the duties of individual directors. Now, as I said, it's not a full picture of everything the board has to worry about or think about, but they certainly do represent the regulatory perspective. It's important for directors to understand that your regulator ultimately holds the board accountable for any bad thing that happens at your bank, even though it's not your job to run the bank. They still hold you ultimately accountable for the performance of the institution from a safety and soundness perspective. So this regulatory imperative, I think, is probably one thing I would point to that really separates a bank board of directors from the board of directors at another kind of company. Got a question. What do you recommend, quarterly or monthly board meetings for a bank of 1.5 billion in assets? That's a great question. We do an annual governance best practices survey. We've done two. We did our first one last year, our second one this year. We didn't ask this question this year, but last year we asked how often bank boards met. And unfortunately, I don't have that up in front of me, but my recollection is that the answer was all over the lot. I mean, I know Huntington, for example, meets quarterly. Huntington is, a $175 billion asset bank, I think. And they meet 4 or 5 times a year. I know community banks of $1.5 billion in assets that meet every single month. So I really think, I know some people would say meeting 12 times a year is a little bit excessive. I personally would think meeting 4 times a year sounds to me like it's not quite enough, but I would think somewhere between 6 and 12 or 6 and 8 probably gives you enough regularity without creating a significant burden on your directors, particularly if you're a bank that services a wide geographical area, and you have directors who have to travel some distance to get to a board meeting. Another question, how many hours would you suggest the new director needs to spend on onboarding process outside of attending board meetings? Bear with me as I read the whole. Obviously depends on size, complexity of the board, but I think it would be good to give some expectations. So I think that first year is going to be pretty intense experience for a new director, particularly if you try to check off a lot of those boxes on the checklist that I went through. I think, I would think, 5 hours a week, 7 hours a week after that first year, whether it's, going through a bank director online training series video, whether it's reading industry publications. There's Bank Director Magazine, but obviously, if your bank is a member of the ABA, there's the ABA Banking Journal. If you're a member of the ICBA, there's a magazine, I believe it's called Independent Banker. There are other more specialized industry publications out there. I think reading and watching videos is the most efficient way of sort of doing your own professional education. And if you were to supplement that with 1 or 2 conferences a year, I think you're probably, doing a pretty good job in terms of staying abreast of what's going on in the industry. So we don't seem to have any other questions. I hope this information has been useful. And remember to check out our onboarding resource guide. We put it together in a way that I think is going to be useful and practical for you. Again, it's available in the bank services section of the bankdirector.com website. Click on the membership tab, the drop-down tab at the top of the homepage, and then click on governance resources. That will take you to a new director onboarding and training page where you can download the guide in a PDF format. And the guide includes at the end of it the checklist that I went through earlier. As a reminder, watch your inbox for the recorded presentation that will be shared with all attendees within 24 hours via email. And it will also be available on bankdirector.com. Thank you very much. I hope this has been useful to you. If you have any questions that occur to you later, you can always email me directly at jmilligan@bankdirector.com. Thank you so much for dialing in, and good luck with your onboarding experience.